Welcome back to the deep dive. Today we're going to be exploring decentralized finance, DeFi, and how it's intersecting with traditional finance.
Yeah.
We're covering a lot today, like how DeFi has evolved, some ways to evaluate DeFi protocols.
Right.
We'll see who the major players are right now and what's coming up on the horizon, what could really change things.
For sure.
And we'll touch on those big hurdles that are keeping the big institutional investors away.
A lot to cover.
To grasp the potential, of DeFi, we have to understand its history, right?
Primarily.
Starting with the basics, blockchain tech and smart contracts. But it actually goes back further than that.
Yeah, you can go all the way back to like 1996, pre-internet as we know it.
Wow.
You have a computer scientist, Nick Szabo,
Okay.
writing about smart contracts in this magazine.
Interesting.
He was already laying out these ideas, automated contracts, digital cash, even digital property. Basically predicting DeFi way before we even had blockchain.
So that's kind of amazing. So how did those early ideas start, actually forming before Ethereum?
Well, you had these, these early, what you might call pioneers.
Yeah.
They were trying to bring these concepts to life.
Interesting.
So like colored coins, they were trying to use the Bitcoin blockchain to represent real-world assets. You also had Ripple exploring those decentralized payment networks.
Right.
And then Mastercoin even. They wanted to build a whole financial layer on top of Bitcoin.
Ambitious.
Yeah, really. They were laying the groundwork, but, the technology just wasn't there yet.
Makes sense. Then Ethereum comes along
Uh,
in 2015.
Yeah.
And things finally start to really take off.
exactly. It was like a Pandora's box opened.
It really was, right?
With Ethereum, developers suddenly had this platform, powerful, smart contract capabilities. It was like a blank canvas for building all these DeFi applications.
Right. So it was like the birth of some of those early DeFi giants like MakerDAO and the DAI stablecoin.
Yeah, for sure.
Speaking of DAI, with the explosion of all these tokenized assets that we see today, the ERC20 token standard must have played a huge role.
Absolutely. It was huge. It was like creating this universal language for tokens on Ethereum, made it, way easier for developers to create and integrate new tokens. That standardization really changed the game. It paved the way for all these different DeFi applications that we see today.
That's super interesting. And let's not forget those decentralized exchanges, the DXs, right?
Of course not.
Like Ether Delta, 0x Protocol, Kyber Network, they were all competing to bring that peer-to-peer trading to the blockchain.
They were definitely the pioneers, right? Figuring everything out as they went along.
So true.
But it was Uniswap V1 in 2018 that really changed everything.
Yeah.
With its elegant automated market maker model.
Uniswap is still a major player today, isn't it?
Oh, for sure. Still a force to be reckoned with.
Absolutely. And around that same time, we also had lending protocols like Compound V1.
Right.
Yeah.
Experimenting with algorithmic interest rates.
Exactly.
Another step towards that dream of a truly decentralized financial system.
Yeah, that was an incredible time for experimentation and innovation. And well, the ecosystem has just been evolving rapidly ever since,
It really has. To really get a sense of this DeFi explosion, I think we need to talk about total value locked, right? Or TVL.
Sure.
It's like one of the most cited metrics in DeFi.
Yeah.
But I've also heard that TVL isn't always the best indicator of a protocol's health. What do you think about that?
You are right to be cautious about only relying on TVL. While it does give us this snapshot of, how much value is locked in those protocols,
Right.
it can be misleading.
Okay.
Some protocols offer crazy high-yield incentives to attract deposits, so that inflates their TVL artificially.
I see. So it's not just about the number itself, but more about how it changes over time and
Yeah.
what's actually causing those changes.
Exactly.
Are there any other metrics we should be looking at?
Definitely. On-chain flows are really important.
Okay.
You can track the movement of assets between centralized exchanges and on-chain addresses, It offers, glimpses into market sentiment.
Okay.
Are people putting assets into DeFi or are they pulling them out?
Interesting.
That can really tell you where the smart money is going.
But trying to figure out those flows can be tricky. Right?
Absolutely.
Because it's not always clear what's causing those movements.
Exactly. You have to look at the bigger picture of the market.
Yeah.
Is it a flight to safety? Are people chasing yield?
Mhm.
It's a lot of different factors.
And another piece of that puzzle has got to be fees and revenue, right?
Right.
Like, how can we evaluate how sustainable a protocol is based on those factors?
Well, a protocol that can't generate enough revenue to, cover its costs, it's like a business that has a leaky faucet. It's
Right.
not going to last very long.
Okay.
But you also have to watch out for those inflated revenue figures, Some protocols use like their native tokens to incentivize things, and that can distort how healthy their finances really are.
Interesting.
You really have to dig deep
Yeah.
and understand where that revenue is coming from and what the real costs are.
So it's all about looking past the hype and understanding, the fundamentals,
Absolutely.
the actual value creation.
Real deal.
Okay. So with that in mind, let's move on to the current DeFi landscape.
Sure.
DXs seem like a good place to start,
Yeah.
considering that they've been like a cornerstone of DeFi since those early days.
Right.
So what are some of the key players that we should be watching?
Well, Uniswap for sure. It's still a major force. It's simple interface, it's got a reliable code base, and it's really widely adopted. Makes it a go-to platform for a lot of users who just want to quickly and efficiently swap tokens.
Okay, but the DX landscape is constantly changing, right?
It is, yeah. It never stops.
So are there any other contenders trying to take Uniswap's crown?
Oh, there are always contenders. Curve Finance, for example, it's carved out its own little niche.
Okay.
Really good for stablecoin trading.
Interesting.
And Balancer, they're known for, their flexible liquidity pools where users can create and trade custom asset baskets.
That's cool. So each platform has its own advantages then.
Exactly. And all that competition is driving a lot of innovation across the entire DX space.
Now, another big player in the DeFi space has to be lending protocols, right?
Right.
We talked about over-collateralized lending earlier. Could you explain the differences between, over-collateralized and under-collateralized lending?
Sure.
And why has over-collateralization been so successful in DeFi?
Okay, so in DeFi, trust is a huge issue.
Right.
You just don't know who you're lending to or borrowing from. Over-collateralization helps to reduce that risk.
Okay.
Basically, you pledge crypto assets as collateral.
Right.
But that collateral has to be worth more than the loan you're taking out.
Okay.
Even if your collateral drops in value, the lender can still get their money back.
That makes sense.
It just works well in a trustless environment.
And under-collateralized lending, why hasn't that taken off in DeFi the same way?
Well, it relies on trust. And off-chain mechanisms to recover assets. That's a real challenge in DeFi. There are projects trying to solve this problem, but it's really hard.
Okay, that makes sense.
Yeah.
The BillVat has really established itself in that over-collateralized lending space.
Yeah.
What makes them different from everyone else?
Well, they're really innovative. They created flash loans, for example,
Right.
and they have this strong reputation for, good risk management, which makes them appealing to, those institutional investors
Makes sense.
who are very cautious about the risks in DeFi.
Understandably so, right?
Yeah, definitely.
Okay, before we get into the future of DeFi, we have to talk about another innovation, liquid staking tokens, or LSTs.
Sure.
They've really exploded in popularity over the last couple of years.
Yeah.
So could you explain why LSTs have become so popular?
Okay, imagine you stake your ETH, right,
Right.
to help secure the Ethereum network. You earn rewards, but your ETH gets locked up.
Okay, I see.
You can't really easily use it in other DeFi protocols. LSTs solve that problem.
Gotcha.
They represent your staked ETH, but they can be freely traded.
Okay, so you get those staking rewards,
Yeah.
but you still have the flexibility to use your assets in, other DeFi applications.
Exactly. You get to have your cake and eat it too. I like it.
Lido, for example.
Yeah.
With their Steth token, they were one of the early pioneers, and they've captured a big chunk of that LST market.
All right, so we've covered a lot from the history of DeFi to those key players who are shaping things right now. But the future of DeFi is where it gets really exciting, right?
Absolutely.
Real world assets, or RWAs.
Yeah.
Seems like the next big thing. Everyone's talking about tokenizing everything. What's driving this trend, and what are some of the potential implications?
Well, imagine taking, traditional assets like real estate or stocks or even fine art, anything really, and bringing it onto the blockchain.
Okay.
Tokenization makes these assets, fractionalized, more liquid,
Right.
more accessible to a wider range of investors.
So it's like turning something that isn't easily traded into something that is like stocks.
Exactly.
What are some of the challenges in bringing those real world assets, the RWAs, on chain? Well, the biggest one is ensuring that the link between the digital token and the real world asset is, secure, reliable.
Makes sense.
We need strong legal frameworks and technological solutions. It's all about establishing trust.
Right. Trust in the digital version of the asset.
Exactly.
Okay.
Mhm.
And what about those trading strategy stablecoins? It sounds like we're about to see a whole new asset class. How do they work?
Okay, so instead of being pegged to a fiat currency like most stablecoins,
Yeah.
these stablecoins get their value from specific trading strategies,
Mm.
like Athena.
Yeah.
They use a cash and carry strategy.
Okay.
They buy an asset on the spot market,
Right.
and then simultaneously sell a futures contract for that same asset.
Oh.
The difference in price, what's called the basis, that creates a profit opportunity,
Mm.
which then backs the stablecoin.
So they're essentially tokenizing that trading strategy and using the profits to, keep that stablecoin pegged. Are there any other emerging trends that you're particularly excited about?
Well, the growth of derivatives protocols,
Okay.
especially with layer 2 blockchains coming into play,
Yeah.
we're starting to see sophisticated financial instruments like perpetual swaps and options being brought to the DeFi world.
I have to admit, those layer 2 blockchains are still a bit of a mystery to me.
Right.
Can you explain why they're so important for derivatives trading?
Okay, so think of layer 2 blockchains like separate networks built on top of existing ones like Ethereum.
Mm.
They help increase scalability, meaning that more transactions can be processed faster and cheaper,
Okay.
which is really important for derivatives since they require frequent trading and settlements.
So layer 2 blockchains make derivatives trading on those DeFi platforms more efficient and cost effective.
Exactly.
Makes sense. And that's attracting both retail and institutional investors looking for new opportunities in DeFi.
Absolutely. It's opening up DeFi to a wider audience.
It seems like DeFi is constantly pushing the boundaries of what's possible in finance, but we shouldn't get carried away with the future just yet.
Right.
There's still some major roadblocks
Yeah.
holding back wider adoption, especially from those big institutional investors.
Absolutely. Despite all the excitement, DeFi still faces some serious challenges, and regulatory uncertainty is definitely at the top of that list.
Yeah, it makes sense that institutions would be hesitant to jump into a space where the rules are still being written.
Right.
So what are some of their specific concerns?
They need to know how, DeFi protocols and tokens will be treated, from a legal and compliance perspective.
Right.
Because a lot of jurisdictions don't have clear guidelines.
All right.
It makes it hard for them to confidently allocate capital to DeFi.
It's like trying to build a house on shifting sand.
Exactly.
And KYC AML compliance is another big one, right?
Oh, absolutely, yeah. Institutions have to follow strict regulations to prevent money laundering.
Yeah.
And other financial crimes, right?
Right.
They need to know that DeFi protocols have those strong KYCML procedures in place. And it's not just about checking the boxes. Institutions are also worried about the technical risks of DeFi.
Yeah, like smart contract vulnerabilities, hacks, exploits. All those are still very real concerns.
Yeah, they are. It's still a relatively young ecosystem. And the lack of institutional grade financial products and services is another hurdle.
Right.
Institutions are used to working with these sophisticated instruments and robust risk management tools, which DeFi is still catching up to.
It's not just about, creating decentralized versions of traditional financial products.
Right.
It's about creating a completely new infrastructure that meets those unique needs of institutional investors.
Exactly.
It sounds like we have a lot more to unpack, but for now, we'll leave it there.
Yeah, it's been a great start to our DeFi exploration.
We'll be back soon to explore those institutional adoption challenges
Right.
in more detail.
Yes.
And talk about the solutions that are coming up to bridge that gap.
Can't wait.
Stay tuned.
See you next time. So as we go deeper into the whole institutional adoption thing,
All right.
it's important to, highlight this shift in mindset
Okay.
that needs to happen within these traditional financial institutions.
Interesting.
You see, it's not just about, building bridges and providing the right tools.
Right.
It's also about, fostering a deeper understanding
Yeah.
of the principles and the potential of DeFi.
You're talking about like a cultural shift, right?
Exactly.
Within those institutions,
Yeah.
moving away from those familiar, centralized
Yeah.
towards embracing the decentralized, trustless nature of DeFi.
Exactly. It's about moving beyond, that perception of DeFi as just like a speculative or fringe movement,
Yeah.
and recognizing its potential to like really transform the very foundation of finance.
So how do we facilitate that shift?
Right.
Is it just a matter of like education?
Well, education is definitely a key part of it.
Okay.
Institutions need to, they need to invest in educating their teams about, all the fundamentals of blockchain technology, the details of how those DeFi protocols work.
Right.
And of course, the potential benefits and risks that come with this emerging asset class.
So it's about equipping them, giving them the knowledge and the tools they need to like navigate this new landscape with confidence.
Precisely.
Yeah.
But, beyond education, it's
Yeah.
also about, creating opportunities for hands-on experience.
Yeah.
Things like, pilot programs, sandbox environments, and strategic partnerships with DeFi projects can all help institutions, actually get practical experience, understand how things work in practice, and, identify those potential use cases within their own businesses.
It's like dipping their toes in the water before jumping in head first.
That's a great way to put it. It's about, gradually building up that familiarity, that understanding, and that confidence instead of like forcing this sudden and drastic change.
Okay, now speaking of specific use cases,
Right.
what are some of the areas where DeFi could, offer those tangible benefits for these traditional financial institutions?
Well, one area is trade finance,
Okay.
which, involves financing the flow of goods and services across borders.
Right.
DeFi solutions could really streamline these processes, reduce the paperwork, automate those payments, and improve transparency.
So it's about making trade finance more efficient, more cost effective, and also more accessible, especially for small and medium-sized businesses, right?
Yeah, especially for
who often face these challenges in accessing those traditional trade finance instruments.
Exactly. Another promising area is payments and settlements.
Okay.
DeFi platforms could offer faster, cheaper, and more transparent cross-border payments.
Right.
Less reliance on those traditional intermediaries,
Yes.
and just improving efficiency overall.
So it's about leveraging the speed and the efficiency of blockchain tech, right?
Yes.
To streamline those payment processes, which could have a huge impact on global trade and commerce.
Absolutely. And let's not forget about the potential of DeFi and things like lending and borrowing.
Yeah.
DeFi platforms could, offer better interest rates, faster loan processing times, and greater transparency, potentially disrupting that whole traditional lending industry.
So it's about creating a more inclusive financial system, right?
Yes.
And more efficient too.
Right.
Where access to capital isn't limited by geography.
Yeah.
Or by those traditional credit scoring methods.
Exactly. And we're already seeing, DeFi platforms offering these innovative lending and borrowing solutions,
Right.
catering to a wider range of borrowers and lenders.
Interesting.
Really challenging those traditional financial paradigms.
This is all pretty exciting,
It is, yeah.
It's clear that DeFi has the potential to like revolutionize not just the way we think about finance, but also the way those traditional financial institutions operate.
I couldn't agree more. And as this, as this mindset shift
Yeah.
within institutions continues, as those bridges between traditional finance and DeFi are strengthened, I think we're going to see like a wave of innovation and disruption that's going to like reshape the financial landscape for years to come.
It's a future worth striving for.
It is.
A future where finance is more accessible,
Yeah.
more efficient, more transparent, and more equitable for everyone.
Absolutely. Now let's dive into another really crucial part of this whole institutional adoption thing.
Right.
The need for DeFi protocols to adapt and evolve to meet the specific needs of these large financial players. You see, it's not just about institutions changing their mindset. It's also about DeFi protocols becoming more institutional friendly.
Right. So it's a two-way street.
It is.
Like a dance of adaptation and evolution, between both sides.
Exactly. So what are some of the key areas where those DeFi protocols need to adapt?
Okay.
Well, one big one is compliance.
Right, of course.
Institutions have to follow a ton of regulations, and DeFi protocols need to show that they're committed to compliance to gain the trust of these investors.
So it's about going beyond that code is law ethos that's often present in the DeFi world,
right?
And embracing the realities of that regulated financial system.
It's exactly. DeFi protocols need to implement strong KYC/AML procedures,
right?
Data privacy safeguards, all those other compliance measures to align with those regulatory requirements that institutions are used to.
It's about creating a DeFi ecosystem that's not only innovative,
right,
but also trustworthy and compliant.
Precisely. Another area where DeFi protocols need to adapt is governance. Institutions are used to having a say in those decision-making processes of the platforms that they invest in.
Right.
DeFi protocols need to provide clear, transparent governance mechanisms to attract that institutional capital.
So it's about moving beyond those purely decentralized, code-driven governance models, and incorporating elements of traditional corporate governance,
right?
Like clear voting procedures, accountability mechanisms, and stakeholder engagement.
Exactly. And we're actually we're seeing some DeFi protocols experimenting with these hybrid governance models.
Oh, okay.
That that blend decentralized decision making with those more traditional corporate governance practices.
So it's about finding that balance between decentralization and accountability, innovation, and stability.
Precisely. And let's not forget, security is important too.
Right.
Institutions are very aware of those security risks associated with DeFi. Yeah. And protocols need to show their commitment to really robust security practices to gain their trust.
So it's about going beyond that, move fast and break things mentality.
Yeah, exactly.
That's often that often characterizes those early stages of tech innovation.
Right.
And embracing a more mature, security conscious approach.
Exactly. DeFi protocols need to invest in rigorous smart contract audits, penetration testing, bug bounty programs, all those other security measures, to protect those user funds, and really build trust with institutional investors.
It's about creating a DeFi ecosystem that's not only innovative, but also secure and reliable.
Precisely. And this includes, addressing that Oracle security issue. We talked about that earlier. Yeah. Reliable, tamper-proof oracles are really important for a lot of DeFi applications. And institutions need to be confident in the integrity of the data feeds that power these protocols.
So it's about making sure that the data that underpins those DeFi decisions is accurate, reliable, and protected from manipulation.
Exactly. And we're seeing a lot of innovation in that Oracle space. Projects are developing more decentralized and robust Oracle networks that can withstand potential attacks.
That's good to hear.
Yeah.
Now let's talk about scalability.
Okay.
We talked about it earlier, right?
Right.
Scalability is a major challenge for a lot of blockchain networks, and DeFi is no exception. So how can DeFi protocols, adapt to handle those increased transaction volumes and user activity that will inevitably come with wider institutional adoption?
Scalability is it's a crucial consideration.
Yeah.
But fortunately, there are some promising solutions, on the horizon. Things like layer 2 scaling solutions, sharding, and new blockchain architectures, specifically designed for high throughput and scalability.
So it's about finding ways to process those transactions faster, cheaper, more efficiently, without having to sacrifice security or decentralization.
Exactly, and we're seeing a lot of experimentation and innovation in this space. As developers explore different approaches to scaling DeFi.
It's an exciting time to be witnessing this evolution of DeFi. As those protocols adapt and evolve to meet the demands of this growing and increasingly sophisticated user base.
I could agree more. And, as these adaptations occur, as those bridges between traditional finance and DeFi are strengthened, I think we're going to see a wave of institutional adoption.
Yeah.
That's going to further accelerate the growth and the maturation of this exciting space.
It's a journey worth following.
It is.
Journey towards a more inclusive, more efficient, and innovative financial system for everyone.
Absolutely. Now, before we wrap up our deep dive into all the challenges and opportunities using DeFi, let's shift gears a little bit and focus on the potential impact of artificial intelligence or AI on the DeFi landscape.
Interesting.
It's a topic that's getting a lot of attention, and for good reason.
Yeah.
AI is it's poised to play this transformative role in the evolution of DeFi, bringing a whole new level of sophistication, automation, and efficiency to this emerging financial ecosystem.
It's like adding like a turbocharged engine to that already speedy DeFi rocket ship.
Exactly. So how will AI actually impact DeFi?
Yeah. Well, one area where AI is already making its mark is in trading.
Okay.
AI-powered trading bots can, they can analyze these huge amounts of data, identify those patterns, and execute trades, super fast and precisely way beyond what human traders can do.
It's like having a whole team of expert traders, right?
Yeah.
Working 24/7, optimizing those trading strategies,
right,
and maximizing returns. Exactly. And as those AI algorithms get more sophisticated, they can even learn and adapt to those changing market conditions. Constantly refining their strategies to stay ahead of the curve.
It's a little bit daunting to think about AI potentially outperforming human traders.
Yeah.
But it's also incredibly exciting to see the potential for increased efficiency and profitability in DeFi trading.
Absolutely. But AI's impact on DeFi goes way beyond just trading. It can revolutionize risk management, fraud detection, and even the development of new financial products and services.
Let's dive into some of those use cases. How can AI enhance risk management in DeFi?
Okay, so AI algorithms can analyze all kinds of data from lots of sources, like on-chain transactions, social media sentiment, market trends, to identify those potential risks and vulnerabilities.
It's like having this vigilant watchdog, right?
Yeah.
Constantly monitoring that DeFi ecosystem, for anything suspicious,
Right.
alerting users and protocols to potential threats.
Exactly. And AI can even go a step further,
Okay.
developing those predictive models
Yay.
that assess how likely certain events are, like smart contract exploits or market crashes, so that users and protocols can be proactive and take measures to mitigate risks.
So it's about moving beyond, just reacting to risk
Yeah.
and embracing this this more proactive and predictive approach.
Yeah.
Based to the power of AI.
Precisely. Now let's talk about fraud detection.
Okay.
DeFi with its pseudo-anonymous nature and global reach, it can be vulnerable to all sorts of fraud, from phishing attacks to money laundering.
Right, like the wild west of finance.
Yeah, you could say that.
Where there are opportunities for both innovation and mischief.
That's a good way to put it. But AI can help bring some order to this Wild West.
Okay.
Using machine learning algorithms to analyze those transaction patterns, identify those suspicious activities, and flag potential fraud attempts in real time.
It's like having a whole team of digital detectives, right?
Yeah.
Constantly on the lookout for those bad actors.
Yeah.
Protecting users and protocols from financial harm.
Exactly. And as AI algorithms get more sophisticated, they can even learn to adapt to new and evolving fraud tactics.
Right.
Staying one step ahead of the criminals.
That's good to hear.
Yeah, definitely. Now beyond risk management, and fraud detection,
right?
How can AI contribute to the development of new financial products and services in DeFi?
Right.
Well, AI can analyze user preferences, market trends, and emerging technologies to identify those unmet needs and opportunities for innovation.
Interesting.
It can even help design and optimize new financial instruments.
Okay.
Things like personalized lending products or AI-powered investment portfolios.
It's like having like an AI-powered financial advisor.
Yeah.
That can tailor products and services to individual needs and risk profiles.
Right.
Create this more personalized and efficient financial experience.
Exactly. And as as AI technology keeps evolving, we're likely to see a whole wave of innovative DeFi products and services that leverage the power of AI to enhance functionality, personalize experiences, and optimize outcomes.
This is all incredibly exciting.
It is.
It's clear that AI has the potential to revolutionize the way we design, build, and interact with DeFi platforms.
Yeah.
Making them more efficient, more secure, and more personalized.
I totally agree. AI isn't just a buzzword,
Right.
It's this transformative force that's going to shape the future of DeFi in profound ways.
Now, before we wrap up our deep dive into the world of DeFi, let's take a step back.
Okay.
Consider those broader implications of this emerging financial ecosystem.
Right.
It's about understanding the potential impact of DeFi, on those traditional financial systems.
Right.
Global economic inclusion. And even the way we govern ourselves.
You're right. DeFi isn't just about, building better financial products. It's about reimagining the very fabric of finance and exploring these new models of economic organization and governance.
It's like a paradigm shift.
It is.
Moving away from that centralized control towards a more decentralized and democratized financial system.
Exactly. And, this shift could potentially disrupt those traditional financial institutions, empower individuals
Yeah.
and create these new opportunities for economic inclusion on a global scale.
Let's dive into those implications.
Okay.
Starting with the potential impact of DeFi on those traditional financial institutions. Some people argue that that DeFi could completely disrupt and even replace those traditional banks and financial intermediaries.
It's a bold claim.
It is.
But not entirely unfounded.
Okay.
DeFi platforms, they offer a lot of those same services
Right.
as those traditional financial institutions, like lending, borrowing, trading,
Right.
FS management.
Yeah.
But with greater transparency, efficiency, and accessibility.
So it's like offering banking services without the bank.
Exactly.
Cutting out that middleman.
Yeah.
And empowering those individuals to manage their own finances directly.
Exactly. And this disintermediation,
Right.
Could threaten those traditional business models of banks and other financial intermediaries.
However, we have to remember that those traditional financial institutions,
Right.
they have deep roots,
Yeah.
and a vast network of relationships. They're not going to just disappear overnight.
That's true, but they can't, they can't afford to just ignore this whole DeFi revolution. A lot of, those forward-thinking institutions are already exploring ways to incorporate DeFi technologies into their existing systems, either, by partnering with DeFi projects or developing, their own in-house solutions.
So it's about adapting and evolving to stay relevant.
Exactly.
In this rapidly changing financial landscape.
Precisely. Now, let's shift our focus a little bit to the potential impact of DeFi on global economic inclusion.
Right.
One of the most promising aspects of DeFi is its ability to empower individuals and communities that have been, traditionally excluded from those traditional financial systems.
You're talking about, the unbanked and the underbanked populations.
Right.
Those who don't have access to basic financial services.
Right. Like bank accounts or loans or credit. DeFi platforms, they're permissionless.
Yeah.
And they have, global reach.
Right.
They can provide access to financial services to anyone with an internet connection, regardless of their location, their credit history or their social status.
It's about democratizing finance.
It is.
Breaking down those barriers that have prevented billions of people from participating in that global economy.
Precisely. And this has the potential, to unlock this tremendous amount of economic potential, empower individuals and create new opportunities for growth and prosperity in developing economies.
It's a powerful vision.
It is.
This vision of a more inclusive and equitable financial system that benefits everyone. Now, let's explore another fascinating implication of DeFi.
Right.
Its potential impact on governance.
Governance. It's a topic that people, often overlook, but it's really at the heart of this whole DeFi revolution. DeFi platforms you see.
Yeah.
They're not just about building better, financial products.
Right.
They're also about, experimenting with these new models of governance and decision making.
So you're talking about moving beyond those traditional hierarchical structures and exploring these more decentralized and participatory forms of governance, where users have a direct voice, in shaping those platforms that they use.
Exactly. A lot of DeFi platforms use decentralized autonomous organizations or DAOs to govern their operations.
DAOs, can you explain what those are?
Sure. A DAO is basically a community governed organization where decisions are made through this transparent transparent and democratic voting process, typically using, blockchain-based tokens to represent those voting rights.
So it's like a digital democracy.
Exactly.
Where users have a direct say in how the platform is run.
Exactly. And this model of governance, has the potential to revolutionize not just the financial sector, but other industries as well, and even the way we govern ourselves as societies.
That's a fascinating concept.
It is.
The idea of leveraging blockchain technology to create these more transparent, accountable, and participatory forms of governance.
It is. And while, DAOs are still in those early stages of development, they represent this really powerful experiment in decentralized governance.
Right.
With the potential, to reshape how we make decisions and allocate resources.
So as we wrap up our deep dive into this world of DeFi, it's important to acknowledge that this is really just the beginning of this long and exciting journey.
For sure.
DeFi is constantly evolving.
Yeah.
With new innovations and challenges popping up all the time.
You're absolutely right. The future of DeFi is full of possibilities, and it's really impossible to say for sure what the final outcome will be.
But the one thing's for sure, right?
Yeah.
DeFi has the potential to fundamentally transform the way we think about and interact with finance, creating this more inclusive, efficient, and innovative financial system for everyone.
I couldn't agree more. It's a journey worth watching.
It is.
A journey that could really redefine the very fabric of our global economy.
And as we continue to explore those uncharted waters of DeFi, one crucial question remains, right?
Right.
What role do you envision playing in this emerging financial landscape?
It's a good question.
Yeah.
Will you be an active participant? Will you be a curious observer, or will you be a skeptical bystander? The choice is yours. But the DeFi revolution,
it's here to stay.
Right.
And it's time to decide how you want to be a part of it.
That's a powerful thought to leave our listeners with. Thanks for joining us on this deep dive.
Yeah, thanks for having me.
Into this fascinating world of decentralized finance. Until next time, keep exploring, keep learning, and keep diving deep.